We have Jyotivardhan Jaipuria, the founder and MD at Valentis Advisors, joining us on the show. Mr. Jaipuria, good afternoon, and thanks so much for joining us. First up, before we talk about how the earnings season has panned out so far, give us your sense on this blanket tariff that Trump has imposed now, 25% on any and all steel and rather metal imports into the country. Give us a sense of what you are making of this and how, if at all, will India stand to benefit or lose out of this on the back of this tariff?
Part of a larger plan. I guess what Trump is trying to do is that I'll put tariffs there because it will make it easier for companies to set up manufacturing in USA, and that will start helping manufacturing in USA and ultimately will help the economy. Now, obviously, to some extent, there's specific countries he's targeting, and India has not so far been one of them. And one could say that if he targets China and he puts more tariffs on China than India, it makes Indian goods more competitive, and so it becomes a bit of advantage for India. But the broader question will be what he will do is in the last 30 years, we've seen a lot of globalization happen. After WTO came in and tariffs came down across the board, across all countries, the whole globalization system may get reversed, and then it will be like a competitive set of tariffs happening across the globe. Every country will start putting tariffs in, and that will start probably hurting global trade. It will lead to a slowdown in the global economy. The second thing it does is inflation, because once he puts tariffs in the US, it means inflation in US will go higher, and everybody else starts putting tariffs. Inflation, which had secularly come down, may start to rise if this continues. My sense is at some point, we will start to see a stabilization of the tariffs, though it's been very active once he's come in. Probably over the next few months, he'll stabilize and put some tariffs which are very selective, but there'll be a give and take. And so, probably, hopefully, the policy environment will slow down and stabilize.
Right. Good afternoon, Mr. Jyotivardhan. This is Shrishti also joining in. But in a market like this, Jyoti, what we are seeing is that no good news is good enough to impact the stock price, but a slightest of the bad news is very bad to actually hammer the stock. Do you believe that this kind of volatility or this kind of mood of the market and the nervousness within the traders will remain for some more time for now?
Yeah, so Shrishti, what we have to remember is this has happened after a long time. So if we go back into history, a 10% sort of correction in the market is actually quite normal. If we take the last 25 years, it's happened in 22 of the last 25 calendar years. We've seen it. It was just that we didn't have it for a very long time. So when it comes back after a long time, it seems very, very, different from what has happened. So I think it will take some time to stabilize, but my guess is probably over the next, few weeks, things will start to stabilize a bit. What we are seeing just now is a lot of pain in the small and mid cap more than in the large cap. So that is where probably things need to stabilize for people to start getting a bit more confidence in the market. Because, the large caps have been fairly stable since the start of this calendar year, but it's been the small cap and the mid cap which has taken a lot of the beating.
So it's looking weaker for the SMIDs right now, and you're seeing some sort of comfort coming in the large caps. But on that note, if we talk about the earnings, Mr. Jaipuria, of how it's been in Q3 so far, if you put it in a nutshell, it's not been as bad as the street was expecting it to be at the beginning of the Q3 earnings season. Would you concur with this?
So I would say it's more or less been in line, but it's better than the previous two quarters. So if we go back into history, the June quarter and the September quarter saw aggregate earnings growth of 3%. So first half was like a 3% earning growth. The second half we think will be better. We think we'll end this December quarter with probably a 6 or 7% earning growth. And the March quarter could be closer to 10% or maybe somewhere between 8 and 10. So the next two quarters will be better. And that is what we're expecting. So far, I would say earnings are coming out more or less in line with what we were expecting. So not some stellar sort of earnings. At the same time, not as bad as what we saw in the September quarter. Because I think September was a reality check for the market. That's where we saw a lot of earnings downgrades coming, a lot of people suddenly realizing that earnings are not doing as well. Somehow when the June quarter numbers came, there were a lot of events going around. And so, market thought it's a one quarter aberration because of the elections. So I think this quarter is turning out to be better. Hopefully in the next quarter, we'll see spending by the government on the capex, because as you know, they need to do probably 4 lakh crores in the last quarter of this year. So if we see that spending coming, we probably hopefully will see a better demand environment coming through, and that will help probably earnings to some extent in the March quarter.
All right, but Jyoti, before we let you go, give us a sense that which are the sectors you believe are the safe spots in this kind of a volatile or weaker sort of a market right now?
So, I'll give you two sectors. One is what is totally out of favor, which is the banking sector. And the reason banks are like relatively safe is valuation. Uh, this is one sector where valuations are probably below a 10-year average valuation. And all other sectors are trading at a premium to 10-year average valuations. So it's one sector where valuations in our favor. Short-term environment is not great. NIMs are under pressure. But given the valuations that we are today, whenever we get a turn in the cycle, then decent money can be made in the banks. The other sector is a sector which has done fairly well, but we still like it. We think growth is highly visible over there for the next few years. That's the pharmaceutical sector, where things are improving in the US. US generic pricing environment has been improving. Demand is picking up. So that's one space which we like. We like the CRAM space also over there, because there we see a very secular growth coming in. The Indian companies probably, earnings can grow at 25% compounded over the next 5 years. So these would be two sectors I think investors can play in this environment.
And pharma looking good even right now. And on that note, Mr. Jaipuria, we'll let you go. Thank you so much for joining us
Thanks
on ET Now and chatting with us about your outlook going ahead.